Hello dear students, welcome to Devika's Commerce and Management Academy. So part of managerial accounting or management accounting, whatever you want you can say, in that we'll see new chapter, that is standard costing and variance analysis. Important chapter and useful for managerial decisions. Not only just marks point of view, don't think it, anyway you'll get marks. Along with that, it is useful practically when you go for any big organizations to take managerial decisions. This will be useful. Standard costing, variance analysis. Let me tell you what is standard costing. Standard costing means nothing but the benchmark, or it is a yardstick, predetermined the cost. The cost is already decided that this is the standard cost. How do you say that this is the standard cost? We are going to consider all kind of transactions, all kind of conditions, market conditions, present conditions, and how the situation is going on, the factors which are going to implement on the cost, all the factors we are going to consider. After that, we'll be deciding that standard cost is this much. We have a product. That product we wanted to launch it. So before going to that, we'll go for survey, market survey. Same kind of products, how many are there, who are the competitors, and what is the price fixing of the market conditions. If you picks up the price at one level, so is it going to work out? Shall we decrease? Shall we increase? If we decrease, what will be the impact? If we increase, what will be the impact? Like, we do a lot of survey. After the survey, we'll be deciding that this is the price. This is the price, we'll fix it. So in the same way, in standard costing, after doing the survey, after reading all the conditions of market, then they'll be deciding that standard cost is this much. We are deciding this is the standard cost. But when it comes to the practicality, the cost may be differing. Sometimes it may increase or decrease compared to this standard cost. So actual cost will be different. The difference between standard cost and actual cost is the variance. Are you getting somewhat idea? Standard costing, variance analysis. Standard costing means it is a benchmark or yardstick. We have decided this standard cost, this will be the standard cost, the market conditions, all these things we have decided. But actual cost is something different. The difference between the what we have decided, what we have studied, that standard cost and actual cost. This difference is the variance analysis. Variance you can say. But this standard cost is depending or you can say divided on three items. One is that is direct material and direct labor and overheads. On these three transactions, it is mainly depending. I would say in short, standard costing is a technique to control the cost, to minimize the cost, to control the cost. So this is one of the best techniques, standard costing. Okay. Now we will see that how we can go for this standard costing. What are the steps involved in standard costing? So these are the main 5 steps. Through these 5 steps, you will come to know what is standard costing. The first thing is that if you want to decide the standard costing, first thing, determination of standard cost. To implement this, first of all, we have to decide the standard cost. How do you decide standard cost? As I told you, we'll be doing the survey, we'll be taking all the political and economic conditions and present conditions, all these things we'll be considering and we'll be deciding the standard cost. This is the standard cost. Later we'll see what will be the actual cost, but in the beginning stage, determination of standard cost is the first step. Then after that, recording of actual cost. Now we'll see what is the actual cost. We have decided standard cost is something, but actual cost is how much? Say for example, as per my assumption or as per my determination, the standard cost is, suppose say 100 rupees. 100 rupees is the standard cost. Actually, when I want to sell the goods, then I came to know that I can sell the goods at the rate of 80 rupees only. This is actual cost. Okay. Now recording the actual cost. First we have decided that 100 rupees is the standard cost. But I came to know that actual cost can be only 80 rupees only. Maybe 120. It may differs. But we have decided this is fixed. And this is recording the actual cost is how much. Once if you decide the actual cost, then we'll be going for the comparison between standard cost and actual cost. We'll be comparing. If you compare it, what happens? You'll come to know that the difference is 20 rupees. Decided 100, but it is, I'm selling for 80. 20 rupees is the difference. So that is comparison. So comparison between standard cost and actual cost. Then after that, finding out variance. Finding out as I told you, variance means nothing but the difference between the standard cost and actual cost. We have compared here in the third step. After comparison, finding out variance. What is variance? 20 rupees. Difference between the standard cost and actual cost, 20 rupees. Then once if you decide the variance, variance means the difference between the standard cost and actual cost. The difference, okay? And then, well, you got it, variance. Then after that, reporting of variance. This variance means 20 rupees I came to know. This I have to report it. So this is difference. Whether it's a favorable or unfavorable also we need to say. 20 rupees difference I got. 20 rupees is favorable or unfavorable. 100 is the market cost. But I am selling for 80 rupees. Unfavorable. If I am selling for more than 100, then it is favorable. Like this, you are reporting variance. Whatever variance you found, that is reporting. So these are the main 5 steps involved in the standard costing. Then we'll see what are the main advantages of standard costing. There are many advantages. Main advantages are these 8 advantages. The first thing is that measuring efficiency. Through the standard costing, we can measure the efficiency of the organization. We have decided standard cost is this much. Now at what rate we are selling? If we are selling more than that, efficiency is good. Like standard cost is 100. If we are selling for 120, 130, then efficiency, we are deciding that it is good. We are selling less than this, then automatically efficiency will be less, not up to the mark. So this is about measuring the efficiency through standard costing. Next one, formulation of production and price policy. We'll come to know exactly the production policy. This is mainly to control the cost. Okay? If you control the cost, automatically that is interlinked with the production. So here I would say formulation of production policies depending on the standard costing, and also price policy also. Price policy based on standard costing, you will be deciding the price cost. Okay. In the same way, determination of variance. Here we'll come to know the variance. We can determine the variance. If we determine the variance, we can do a lot of things. The variance, we have decided that 20 rupees is the variance. Favorable or unfavorable also we have decided. Then automatically everything is depends on the difference, variance, what you got it. You'll come to know exactly what is happening in the organization. And next thing is that reduction of work. We can reduce even the work also. So standard cost, how much is there? Now how can we decrease the cost? If you want to decrease the cost, where we have to decrease? All these things depending on the reduction of the work. In the same way, management by exemption. Management can handle the organization easily, happily, because through the standard costing, they'll come to know what is standard costing, what is actual cost, and why we are getting that kind of difference. And they'll come to know all kind of loopholes, drawbacks, and what they can do. This kind of everything, future forecasting, they'll be finding it. The vision of the organization, they'll be knowing through the standard costing. That is why we can say management by exception. They'll be getting a lot of benefits. Next one is facilities to control the cost. Cost we want to control. If you control the cost, automatically demand will be more. We have studied in economics. Demand, supply, cost. These three are interlinked. Cost is controlled, cost is decreased, and demand will be more. If demand is more, supply has to be increased. The same demand supply principle we are applying here. That is to control the cost. If we can control the cost, how we can control? We are studying three things: direct labor, direct material, and also overheads, where we can control. So that we can decide it over there only. Here only you can decide controlling cost, how to control, which area we are wasting a lot, which area we have to focus, how we can rectify it. So that is depending on the cost control. Next one is that eliminating inefficiencies. Through standard deviation and variance analysis, you will come to know the inefficiencies. Where we are having the problem, identify it, and there you have to trigger it out, there you have to focus, and how to overcome those inefficiencies, so that you can make a plan through this. Otherwise we won't be knowing anything. At the end of the day, you'll come to know companies under loss or profits. Rather than that, you'll come to know through this variance analysis what is the difference between actual cost and standard cost. There you'll come to know. So where we are having the problem, that is inefficiencies, you can identify it if you study a little bit. And next, helping in taking important decisions. What are the important decisions? Mainly the price fixing. Once if you decide a standard price, then according to that fixing up the price. Then production, how much we have to produce, and how we have to launch the product, how we have to give the advertisement, how we have to reach the customer with a less price, less media expenses, like lot of things are there. All these things they can take the decisions once if they come to know the standard cost and variance analysis, isn't it? So these are the main advantages of standard costing. Take a screenshot or note down. In the coming classes, we'll see in depth. Interesting chapter, just focus, nothing to worry. Not difficult, it's not difficult, easily you can understand. And by the way, did you check the playlist? There are many subjects which may be useful for your career, and don't forget to forward these videos. Sharing is caring, right? So take care of your career. Good luck.